afternoon, ladies and gentlemen. So I think all of you are enough with today's sales speech, right? Or you're not enough? You want me to sell things on the stage now? No? Yes? No. So I think no one wants to hear any sales speech from me, and I'm not going to deliver that for you today. Because what I'm going to deliver today is a thing that will matter to you, directly to you, and probably your family, your friends, because today I'm going to share how ownership of Bitcoin can change your portfolio. You can raise your questions later by the end of this slide, and I hope that this session will enlighten you how this Bitcoin can help you. But before I start, who am I? I'm not a Spider-Man, but I am in the industry for quite a couple of years, more than 10 years actually. In the crypto industry itself, I've been in more than 5 years. And I am one of the leaders in Indonesian crypto community. So you can Google me, and then you can find that I am one of the translator of Bitcoin white paper. So you can find my name in bitcoin.org. Why I did that? Because I think it is good for people to know Bitcoin first before you go to other cryptos. A lot of people are misled by another cryptos, which I think is a sad thing. Because when you are jumped into other crypto and then you don't even understand what Bitcoin is, what it is for, and a lot of you will just stop in investing in this new industry, which I think is a sad thing. So I would suggest you to go home later and read about Bitcoin. It's just 9 pages. Try to understand that, and you can probably ask a lot of Bitcoin maxis about what Bitcoin is and how it can help you. Okay, so that's enough about me. Let's go to the next one. So in order to grow your account, in order to grow your portfolio, there are two main things that you may want to see. The first thing is going to be the inflation itself. As we all know that the inflation rate in the past couple of years has skyrocketed. Even 2 years ago, I bought a plane ticket back to my hometown, and because of pandemic, I need to cancel it. And it is quite unfortunate that when I buy my same ticket this year, the price has doubled. So with the same amount of money, I cannot buy the same thing again. So in this case, I can say that the value of my money has decreased. And I think it is not only happening to me only, but it also happened to every one of us here. And I believe that we also experience the price hike of many goods and services, and that also affects our wealth. Because when we are talking about wealth, we are not only talking about we are not only talking about the dollar amount, but we are talking about the value that we can get. How many things, how many goods and services that you can get with each dollar that you have. That is the essence of your wealth. It is different of owning $1 million today and $1 million in the next 30 years. Does anyone disagree about this? I think everyone is agree with this. And the next thing that is also very important is a lot of people try to grow their money, grow their portfolio, and they think that I have a lot of knowledge about this, and then I will invest by myself. But a lot of us have held our ego for too high. And then we think that by managing my own portfolio, I can beat the index. I can outperform these instruments. But in fact, a lot of people who try to manage their own money, they fail. They fail to outperform many existing instruments, which I will show you later, right after this. Yep. So in order to outperform the market, in order to beat the inflation, the easiest way is, of course, to find what is the fastest horse. Or even the faster horse. Faster or fastest? Yeah, it all depends on how you want to allocate your money. But this is the bottom line of everything. if you want to outperform things, if you want to outperform index, if you want to outperform certain benchmark, then you need to find this. And a lot of people probably are still doubtful, especially those people with more senior age, like my parents. They might be doubtful. If it wasn't me, they might not buy any Bitcoin, but luckily they have bought some because I pushed them. Yeah, I pushed them because I think it is good for them to own certain amount, which I will show you the impact later. How big the impact will be to your account, to your portfolio. And I am here today. I'm not selling you anything. I'm just sharing you how good or how much that it can impact your portfolio. It may not be huge, like very huge, but for developed country, this number can be very huge. So these are the growth rate. As you can see, it is the growth rate per year, or the compounded annual growth return of these instruments that have been recorded. The first one would be the inflation rate. So the inflation rate itself, in the past 5 years, it was running at 4.24% on average. And by the way, this number is taken from the US inflation. So if you are from developing country, like me, from Indonesia, we have a lot higher number, although we know that the government is recording very low number. But one thing that we need to also understand, that inflation rate that is given out by the government is not the inflation rate that can reflect the inflation that we feel. Why I say so? Because everyone do not have the same goods and services that we consume. Maybe some of you are eating a product from a certain company, but maybe your friends are not consuming those products. So different people will have different rate of inflation. And in order to know your real inflation is only by recording your transactions. So if you jot down your own transactions, then you know your real inflation. But let's just simplify things. Let's just use the inflation rate that was released by the government. So in this case, we are using the US one. And in the past 10 years in the US itself, the inflation rate is at 2.84%. It may seem very small. Yes, it may seem very small. But when you compound this number, then here comes the problem. 2.84% per year is quite small, not much. But when you do it for 10 years, then the number can be kind of huge. And again, if you're coming from developing countries, then the number will be like substantially huge. The second thing is one of the most popular instrument, especially for my parents and for the senior people. They would like to save in gold. One thing that a lot of people do not understand about gold is gold will never make you rich. Yes, gold will never make you rich, but gold will maintain your wealth because it is the hard asset. It is the hard asset. It is unlike the money that we hold that is not hard. So it is still much better for you to save on gold than save on your currency. In the past 5 years, the average yearly return is at around 8.16%, 8.16%. And then in the past 10 years, it is only around 1.41%. And if you check the inflation rate for the past 10 years, it actually did not hedge the inflation itself. Yes, it is so sad that it did not even hedge the inflation. It was intended to be used as the hedge against inflation, but it kind of failed. So we need to find another faster horse. Some people would like to put their money in ETFs. So in this case, I took data from Dow Jones Industrial Average, S&P 500, and NASDAQ. That's why you see the range there. So on average, in the past 5 years, the average return per year is around 8 to 17%. And I think you might be able to guess. The one that have 17% would be NASDAQ 100, the tech companies. the cyclical stocks, if you want to say that. And in the past 10 years, the return of these three is ranging at 10 to 17%. At least it is faster than the rest. At least it is better. It can hedge your inflation, and also it may outperform other instruments. But what is even more interesting is, despite the price of Bitcoin that has plunged by 70%, yes, 70%, you did not hear it wrongly, but in the past 10 years, the performance of Bitcoin is at 55 to 66%. It depends on when you enter the market and when you exit the market. It can go up to like 100% plus. Like what happened in the past 10 years, it was 124 to 133% per year. Per year. Again, this number is based on the data. I'm not making this number up. You can do the calculation by yourself at home. And this is based on the price of Bitcoin at 22,000 when I made this slide. Okay? Currently, the price of Bitcoin is at around $20,000 to $21,000. So this number will not change too much since it is for 5 to 10 years. But again, as we can see according to this data, Bitcoin is still the faster horse, if not the fastest one. But there might be some people asking me this: should we all into Bitcoin? Does anyone here do all into Bitcoin? Anyone? All into Bitcoin? Or does anyone all into other cryptos? No? Or just shy? Not a big deal. For me, I think it is okay, especially when you are still young and free, to be more risky, but I personally will not suggest everyone to just go all in. It may not make sense for everyone to all in, especially when you cannot sit on the risk. Again, when you read on the internet, a lot of them will just say, if you cannot stand my 30% of minus, you cannot get my 10x, which is kind of true. A lot of people just focus on the potential profit, but they forget about the risk, which I will also emphasize today. If you want to invest in any cryptos, specifically I will focus more on Bitcoin since the volatility is a lot lower than other cryptos. Not finished yet? Yeah. And I think it is even more robust than other cryptos. So it is good if you want to allocate a bit. I'm not saying that you are allocating 100%, but I will just give you an example. If you allocate just 5%, I don't think 5% will hurt too much when you have such volatility, but 5% will bring huge potential. Let's see. So when we are doing this investment, risky investment, it depends how much your risk can be. I will always suggest people to start with yourself, not with the instrument. Yes, this approach may not be very common among crypto traders, among crypto investors, but as a certified financial planner, I think it is a must for me to share with you that you must do your risk assessment first. Assess yourself whether you can sit on the risk. Because a lot of people try to get the potential return without the consideration of themselves, without knowing themselves that are they able to hold this risk? Is this their cup of tea? Because everyone will not have the same cup of tea. So I would suggest you to start with this first. How to do it? It is very simple. You just Google risk assessment, do it yourself, find at which level that is suitable for you. That's the first thing. Because without knowing yourself, a lot of time when you see this volatility, you will sell your position, you'll be the paper hand, that's what we call today, and then the price will go up. And I think this is what a lot of us feel. Every time when I sell, the price goes up. Every time when I buy, the price goes down. Am I right? Am I right? This is because we haven't known our risk profile. So know yourself first before you start chipping in your money. Okay, so first thing first. The second thing is, I would say that you need to do the best practice in personal finance first. I believe some of us may have seen the meme of crypto traders jumping from the lowest floor to the highest floor without knowing anything about personal finance. I would suggest you to manage your personal finance first. Really do your budgeting. Really make sure that you have no debt first before you start investing. So you do your personal finance, have your emergency funds, buy your insurance, and then you can start investing. Not investing with debt, that is not a good idea, with P2P lendings or any kind of lendings. No, it will kill you. It will kill you. And never start your investing journey with leverage. Yes, you heard me right. A lot of people nowadays, they do not even know the crypto itself, but they trade on leverage crypto. Leverage crypto derivatives. Yes, which is insane. And the number that you see, those are just some delusional number. 1,000%, yes, based on the margin, not based on your portfolio. So you need to also know the gameplay. If you don't know how to score a goal, try to learn about the game first. Try to learn about the gameplay first. Not jump into it and then you say, this company, that company, trap me, trick me, and so on. A lot of time we try to blame others without looking at ourselves. So now I try to emphasize that we need to learn about these things first. And lastly, set your number. Setting our number is very important because a lot of us, we just, as what I mentioned, did all in because we want to get rich quick, which is very normal. But one thing that I would like to emphasize that if you don't know the amount of risk that you can handle, much better you set your number first before you start allocating. Simple math, if you think that 30% of volatility is okay for you, 30, then try not to put 100% of your portfolio in it. How to calculate? Simple. If you have $10,000 of portfolio, total investment portfolio, and then you can hold volatility of 30%, which is $3,000, and then how much that I can put crypto in it. So in order to do the calculation, it is very simple. You just take the number of volatility that you expect. For instance, okay, let's take 60% of volatility. 60. So in order for my portfolio to be able to stand with the volatility of crypto, it means that I take this $3,000, which is the 30%, divided by 60%, which is the volatility, which means I can allocate maximum of $5,000 of my portfolio into crypto. So that is the maximum, which means whenever your crypto allocation get the volatility of 60%, you will still be good. And then when you do the calculation later at home, probably you will end up like only allocating like 5%, 3%, or even 1%, which is still okay. But if you are investing in crypto asset, I will suggest you to just invest in Bitcoin. I'm not the sales of Bitcoin. Bitcoin doesn't pay me anything. I'm not even affiliated to Bitcoin. But why Bitcoin? First, you can have the deepest liquidity of your investment. Deep liquidity means a lot when you are investing. You want to make sure that whenever you sell, the price doesn't change a lot. Because that is very important. Imagine that if you just sell $10,000 worth of your portfolio, and then the price changed by 20%. It doesn't make sense. So that is one of the main reasons. The second one would be, it is the only fully decentralized crypto asset. Yes, it is the only one. So it is much better for you to put your money into a decentralized one, not into a centralized one. Yeah, you can raise your question later if you have any questions. Yeah, and lastly, it has been proven to pass many crises. So it means that probably this will pass as well. I mean, this crisis. So how's the impact? As what I mentioned, I will share to you the impact if you put certain amount of your portfolio into Bitcoin. Let's see the lower end of the range. If you put your portfolio just to the shares or ETF, then let's say your return is at 17%. In this case, I'm taking the higher end of the range, assuming that you are putting your money in Nasdaq 100 index. But if you allocate just 5% of your portfolio into Bitcoin, you can see the return is at 18.65%. It gives you a little bit bump. Around 1.65% of extra may not be huge, especially for us from developing countries. But for people in developed countries like Singapore, it is a lot. But if we take the higher end of the return, then it is at 21.15%. It gives you 4.15% of extra, which I believe in developed countries, if you want to retire, you use the rule of 4%, which means this extra 4% can give you your retirement. So whether you want to start now, later, at least I have shared this idea so you can do your own consideration, do your own homework, do your personal risk management and risk assessment, and of course, manage your own personal finance. And this is the result if you start your 10 years plan. I'm not selling you anything, just to show you numbers. So if you have initial investment of $10,000, and then on monthly basis, you do $1,000 of deposit. With that kind of return, if you only put in shares or ETF, then you will get $365K by the end of the 10th year. But if you just allocate extra 5%, you'll get $408K or $486K. Yes, you see the difference there. So whether this number is enough for you, it is back to yourself, whether it is enough. If it is not enough, then you must do something. Whether you allocate more, do some risk, then probably it can reach your goal. And lastly, although Bitcoin or crypto can boost the performance of your portfolio, one thing that I would like to emphasize is you also need to understand about the risk. The risk can be very high, and I don't want you to blame me later, someday in the future, Chris, because of you, I invest in Bitcoin and I lose everything. No. Try to do your homework. Try to consider the number that is suitable to you. I cannot tell you the best number or the best allocation. You yourself know your number. And I will not suggest you to do this kind of investment if you do it for shorter term goal. If you do it for long-term goal, 10 years, 15 years, 20 years, that's fine. You still can hold the volatility. But if it is for short-term goal, just do simple stuff. Fixed income, money market, those kind of things. I think that's all from me.